The SEC just dropped a bomb on the crypto market in the best way possible. They announced the Project Crypto initiative, which is the most bullish move that I have ever seen since the early days of ICO back in 2017. Today, I will dissect this release point by point, going over the 5 main tasks that the SEC aims to accomplish and the types of coins and platforms which will benefit from this the most. This was just announced yesterday afternoon. SEC debuts Project Crypto to bring US financial markets on-chain. At the headline, it doesn't seem too dramatic, doesn't seem super bullish. However, don't let that fool you. This is the most comprehensive thing that we have ever gotten when it comes to positive regulation for crypto coming from the SEC since forever. So at its core, this is a new initiative that is agency-wide. It's not just one piece of legislation or bill. Instead, it's a whole initiative to push multiple bills forward to tackle clarity on different sectors of crypto for the SEC. So there are some key highlights that I'll give you guys right away. And Hasib has a really good summary here. So these main highlights are, number one, almost all tokens are not securities. This is a big change from the past 5 years where most coins are securities by default. Number two, they want to discourage decentralization theater, aka everyone launching a layer 1 blockchain and saying that because it's a native blockchain coin, then it's decentralized. We all know that's all fake. So they want to discourage that and actually have something real of a guideline. Number three, Americans should not be excluded by most platforms and having to use VPNs. Really good. Number four, there will be explicit exemptions for ICOs, airdrops, etc. Not only for participants in the US, in North America, etc., where you can more freely participate, but also for issuers. For this point specifically, here, you see people that haven't been as familiar as the early days of ICO. They have questioned, what does this actually mean? Is it about taxes? Is it about VPNs? This is important in a sense for US investors to be able to access the ICO website, but way more important is for projects to actually be allowed to do ICOs at all. So in 2017, 2018, even 2021, there were a lot of ICOs, airdrops, IDOs, tokens being released without, a big fear that the SEC is going to come after you. However, we see way less now for the last 3 years because when you're doing one of these large public sales, it just seems like a huge gray area that the projects are very scared. What if the SEC comes after them, sues them? So not only is the exemption for US participants, but way more for what is even allowed. Even in traditional ICO before this case, you had to do all the things to block US investors, not because you don't want to include them, but more so because the better job you do at blocking US investors, the better chance that you have surviving without the SEC coming after you. So this is why not a lot of projects even do ICOs or public sales at all. They opt to do like a small amount in an IDO, in a very controlled setting on an exchange, or a very small airdrop. Sometimes even the airdrops are very locked with a long vesting. So these are all because there are no rules for that. The next point is non-securities should be tradable alongside securities on the same platform. This sounds vague, but this means even if you are your coin is still a security by the clear guidelines, it can still trade. This is also much more important because the question no longer becomes, okay, are we a security or are we not? And if it is a security, somehow it will be sued by the SEC and go to zero. That's no longer the case. Both classifications should be able to trade freely. Protect software engineers. This is actually more to do with DeFi platforms. We'll talk about that in a bit. Licensing requirements. And innovation exemption. This is for newer projects, smaller projects that are just coming up, trying to release a token that they don't have such a big network of people coming in to contribute to consensus, to make it fit the whole standard. In this case, they have a few what they call first principles based guidelines, so that they can easily just adhere to them and still be able to release tokens without worrying too much for smaller companies. So these are all very, very good. And any of these things over the past few years would have made big headlines. Now, the SEC just put out all of these in one official long piece initiative right here. So we're going to dissect this today. Okay, so here we go. I'm going to, I have already highlighted the things that actually matter. If you want to read this, you can just Google SEC Project Crypto, and you'll see this exact thing that's been released yesterday. Read through this, highly recommend it. So first point is, what is the Project Crypto? At its core, the tagline is they want to help President Trump in his historic effort to make America the crypto capital of the world. This is one of the core campaign speeches that he has made. Blah, blah, blah. This first part is just about comparing capital markets traditionally, the stock market, to what we have right now with on-chain trading, with blockchain, with crypto. So this big preamble, you don't have to worry about it. The first section that matters starts here. So Project Crypto itself is not one bill. It's a commission-wide initiative to modernize the securities rules and regulations to enable America's financial markets to move on-chain. This on-chain part is actually very interesting. They mention a lot of things on-chain, not just for regulating crypto coins and then bringing them to traditional stock exchanges. No, they actually heavily talk about wallets, DeFi exchanges, issuing tokens on chain, these things that we directly interact with from our wallet with a smart contract. These are things that are on chain. It's actually catered towards what people can do on chain and giving clarity for them. Okay. After signing the Genius Act into law, the SEC's I believe chair, Paul Atkins, have been very happy that Trump endorsed congressional efforts to pass crypto market structure legislation by the end of the year. This crypto market structure legislation is specifically referring to the Clarity Act, which is not this one, this is a Canadian thing. The Clarity Act for crypto in the US, which aims to define what kind of coins are securities, what kind of coins are commodities, and thus the security coins are regulated by the SEC, and the commodity coins are regulated by the CFTC. This just basically confirms that, okay, by the end of the year, this is roughly the timeline that they want to roll all of these things out. This is also important right here. Whenever this report references this keyword PWG, this refers to the President's Working Group on Digital Asset Markets. This is a group of advisors that includes some DeFi founders, the Gemini twins, exchange founders, Brian Armstrong, Michael Saylor, et cetera, et cetera. Okay. Next, here we get into the specifics, and each of these paragraphs is roughly one main task that the SEC has laid out that I want to do. So first, let me go to my summary here. Okay. We have the main goal here, which is to move America's financial markets on-chain. In order to do that, task number one is, to summarize here, they need to bring crypto asset distributions back to America. Keyword here is distributions. What does that mean? That means a new coin that wants to come to the market. They do a public sale, they do an airdrop, they do send their coins to investors, they do mining, staking, whatever, right? Can they do that to US citizens, and can they do it in America? Before, it's very hard. Now they want to bring this back. So what does that involve? The days of convoluted offshore corporate structures, decentralization theater, and confusion over security statuses are over. Decentralization theater here means, again, you don't have to necessarily create a layer 1 blockchain and have it be, oh, we have to have 100 validators that are all run by us, and we have 5 different pies in our tokenomics so that 51% goes to the community in our official tokenomics, and thus it's decentralized. We all know that's Fugazi, right? So we don't need that. Instead, they want to make a clear regulatory framework for distributions of crypto assets in America. Very cool. So there are 2 parts to this, right? If you are distributing a security versus if you're distributing not a security in terms of a crypto coin. Before, everyone that's trying to issue a token really wanted to be officially labeled as not a security. But despite what everyone has tried with the Howey test, etc., it has been always very vague. So the SEC said in the past that they have to use the Howey test, but they never really confirmed anything. But now, officially, the chair of the SEC comes out and says, most crypto assets are not securities. This is amazing. I never thought we would see this, right? Because even over the past 2 years, for example, it's so hard to even get one coin like XRP or Ethereum, right, to be going up against the SEC in court, and then the court rules and the SEC doesn't object, and then we kind of know that that coin is not a security. Now the SEC says most crypto assets are not securities. Very cool. Okay, so with that, then for new coins, not only is it the old coins, most are not securities, but also they want to develop a clear guideline that us, market participants, can use to determine whether a crypto asset is a security or subject to an investment contract. So there are 2 terms here, a security and subject to an investment contract. It's actually slightly different because security is technically what you can trade on a platform, whereas an investment contract also includes ICOs, airdrops, etc. Can you receive them? So they want to essentially have on their website, on the SEC, a bunch of classifications of different types of coins. So they want to help market participants to slot crypto assets into categories such as digital collectibles, aka NFTs, or meme coins, for instance, anything that's fun. Digital commodities, these are things that are defined in the Clarity Act, which we'll talk about in a bit. Mostly those are layer 1 blockchain coins, including Bitcoin, Ethereum, Solana, XRP, the things that have been running for a very long time. Or stablecoins, for instance. People have to know for sure what is a stablecoin. And they have to assess the economic realities of a transaction. So can they actually buy it without worrying about the SEC coming after their coin? Next, even if your coin is deemed a security, that's not the end of the world. They also want a regulatory framework for crypto asset securities to allow these products to also work in the US. So many issuers can choose to have the flexibility in offering some unique things. For instance, for their investors to benefit to earn distributions. Like you have a platform that generates fees, those fees goes to the token holders. That's a pretty clear, relationship for a typical security. You can do that by following these guidelines. You can have voting rights, and you can have other features that are typical of securities. And that's not the end of the world, because these can trade in the US as well. Very cool. Here, it specifically mentions, okay, if you are selling one of these things that you're doing an ICO, you're doing an airdrop, and technically your coin still earns fees from your platform. It has distributions, voting rights, etc. It might be a security. You can still have certain disclosures, exemptions, and safe harbors in order to conduct a ICO, a airdrop, or some sort of reward mining program, early distribution program to US people. This is really cool. Not only is it that US people can KYC or access directly from their computer without VPN, but also your company, right? If it has a lot of US interest, you don't have to be worried that you can't do an ICO anymore. It's all okay. It will have clear ways to file with the SEC. And finally, if you're doing tokenized stocks, tokenized bonds, tokenized other securities or RWAs, totally fine as well. There will be other ways to file these types of offerings. So this first big section is very cool. I think the key takeaway for me that I want to know is, I want to pay attention to is here, ICOs and airdrops. Think about it for yourself, right? How many times have you had a public sale where everyone can get in, right? You have no whitelist, you have no KYC, you have no VPN, like the good old days of 2017 ICOs. And you can just put money in, right? The project raises a lot of money that they can use for development. It has a very wide distribution of investors, which is very good for their community. Everyone's happy as long as the coin goes up afterwards, but it's very fair. How often do we have that this cycle? It's so rare. It's like once per 6 months maybe, compared to even 2020 DeFi summer times. It was much easier to do these things. So this I'm very excited about for, once these things are passed, I'm super looking forward to do more public ICOs. Those are usually very good opportunities. Of course, airdrops and network rewards, think of things like early high yield farming, Genesis pool farming, IDOs, for example, doing it on chain, all totally doable. Okay, next, task number 2 is pretty small, but it's to do with custodians, trading venues, and wallets. So basically, remember Operation Chokepoint 2.0 for all the people that are forced out of the US because they needed to have a money transmitter license in order to run a self-custody wallet. How does that make any sense? Because they don't hold your money. So why do they need a money transmitter license? They no longer want that. They're taking that away from Operation Chokepoint 2.0 stuff. Instead, if you run a wallet, you can totally let people in the US download it and use it. Very cool. Task number 3. This is kind of vague in the way they present it, but I'm going to break it down for you. They say that they want to have this umbrella regulation for super apps, horizontal integration product offerings. Like, what does this mean, right? This actually has to do with exchanges and crypto centralized all-in-one providers. Think Binance, Crypto.com, OKX, Bybit, whatever, Coinbase. These things that offer an exchange, but also offers a Web3 wallet, staking, lending, IDOs, crypto credit card, etc. Right? So before, in order to do this, even offering the exchange in the US, you needed to apply one license for each state, which was crazy. And then if you want to do staking, it's another license. Lending, another license. If you want to do leverage trading, you have to separate out on Binance, for instance. US people could not access Binance anyways, right? But let's say Crypto.com, for instance. Crypto.com and Coinbase were accessible in the US. However, they have a leverage trading platform, but specifically they needed to separate it out completely so that their US users could not use the leverage part, because there's a specific license that does not allow them to offer leverage trading in the US. So all of this extra 100 license stuff is very complicated. And that's what they want to do here with this task, is to help all of the crypto exchange platforms to give them one big super app regulation. They call it Reg Super App. Very weird name. Essentially, you do this, and then you can offer everything that's under the umbrella. not only trading, but staking, lending, borrowing, IDOs, etc., etc. So it actually outlines all of them here. Develop a framework that will not allow non-security crypto assets and crypto asset securities to be traded side by side on SEC regulated platforms. So if you use Coinbase, for example, most coins that trade on Coinbase have been pretty vetted and deemed not securities, at least following certain standards. Remember how Coinbase and Binance US as well have been sued by the SEC before for offering not exactly trading of crypto, because they can trade Bitcoin, Ethereum, but things like Solana, Polygon, XRP, BNB, a bunch of other coins that were mixed in the same trading platform. The SEC didn't like this before. Now it's okay. So if you have a crypto exchange, let's say Binance, and you choose to offer it in the US, you can, of course, let people trade Bitcoin, Ethereum, but on that same platform, you can let people trade like Uniswap, BNB coin, whatever, right? Like Solana, XRP, and even like smaller altcoins. All okay. Next, they want to evaluate to permit non-security crypto assets that are subject to an investment contract to trade on trading venues that are not registered with the commission. What does this mean? This is actually very interesting. So when it's a non-security crypto asset, but it is subject to an investment contract, this is specifically talking about IDOs or new token offerings. So even if you sell a token through an initial exchange offering, IEO, and your token is not a security by the guidelines, there is still the question of when you invest in this token from a US person, can you do that, right? Can you do that through some centralized platform? So that's what this is talking about, is on these exchanges, you can offer trading and you can also offer IEOs. Very interesting here. And then finally here, this also clears the way for CFTC regulated platforms to offer these products with margin capabilities. So CFTC regulated platforms, specifically, it's talking about an exchange that trades digital commodities. So the clear ones, Bitcoin, Ethereum, Solana, XRP, Dogecoin, the top 10s. If your exchange trades these, you can actually offer trading with margin or leverage trading. And we've seen this already. So Coinbase, the clearest example. On July 21st, they announced this already. So CFTC regulated contracts for Bitcoin and Ethereum futures, leverage futures, will be offered in the US starting from, there's a date here sometime. But I believe it's like soon, whatever, like August, let's say, because this was last month. In the US, leverage trading has been completely banned for 4 years plus now, since 2021. This is a big move. Essentially, this is all the blue chip coins will actually have leverage trading in the US. You don't have to use those things, like even on our exchange links. Oh, if you want to trade with leverage, whatever, you want to short a coin, you can't use these exchanges. You have to use these smaller ones. That's not the case. Soon you can do it on Coinbase. Very cool. Okay. Never thought I'd see this actually come out, but it is. And then just a last little bit, I want to reiterate on this. Remember the language that the XRP Ripple lawsuit went through with the SEC? So there are two clauses there, right? The SEC deemed that Ripple's sales of XRP was not a security offering to private investors. However, the trading of XRP coins on US exchanges was a sale of an investment contract. So that is a specific case. When you do a private sale, for instance, and your token is live, there is also that this thing called the SEC Regulation S, Rule 144, I believe, where it states, just stay with me here, that if you sell coins to a private investor for 1 year after that time, you cannot have these private investors resell those tokens to a US person. A very specific thing, okay? If you're deep in IDOs, ICOs, you would notice this, right? Most crypto exchanges, the big ones, Binance for instance, they always enforce a 1 year cliff for public investors or private investors. Why is that? It's because of this. For like, if you're a seasoned angel investor, you would know this. When you do a private sale, or you invest in anything, you invest in like a syndicate, pool, whatever. It doesn't have to be institution. You can invest like $1,000. Still, if it's a major exchange listing, that exchange will force the project to lock the private sale investor tokens for 1 year. It's because of this rule, because the private sale investors are not allowed to sell those tokens for 1 year in case any person that somehow accesses the platform or the decentralized exchange is based in the US and they buy your tokens that you have sold to on the exchange. That violates older security laws. So that's why there has always been a 1 year cliff period for big coin investments. So with this new rule set here, it's actually okay. This 1 year cliff period that's mandatory might be taken out on some of the new coins coming up, which is actually very good. Okay, so there we go. The next point is specifically to do with DeFi. I never thought they would say this on the SEC website, but here we go. They want to unleash the potential of on-chain software systems in our security markets. On-chain. Even more specific, it mentions one type of on-chain platform. Automated market makers facilitate automated, non-intermediated financial market activity. Automated market maker, what is this? It's AMM, it's Uniswap, it's Radium, it's Jupiter, it's anything that every time that you swap on wallet, on chain, it's an automated market maker. So this is super good for Uniswap in my eyes. And for some of the OG decentralized exchanges that have had a very hard time, even though their business is very sound. So I have made a video recently about this. This one here, 10 altcoins to pump after Ethereum's all-time high, talking about some of the legacy, ETH core DeFi infrastructure, Uniswap, Curve, for instance. So Uniswap and Curve are two of the most important pieces of trading infra, period, right? Uniswap was the one really to popularize on-chain trading at all. And Curve completely powers stablecoin swapping on-chain. So these are both automated market makers. So the big problem that the SEC has given these platforms before is you need to have this like filing and tell them who is responsible for acting as the broker on-chain. But we all know how it works. Uniswap is completely governed and run by smart contracts. You interact with the smart contract and the other trader on the other side also gets the coin from a smart contract. There is no person in the middle like typing, let's match your order. That doesn't exist. So that's why they have specifically outlined this, and they don't want to force intermediary companies in the middle when there isn't one. So very cool. I think this is actually super bullish for Uniswap and for very established decentralized exchanges. They can fully offer in the US, and their coins will get pretty good treatment as well, hopefully, that they don't have to be completely going to war with the SEC all the time on whether they have a US broker license or not, because they don't need one. It's a smart contract. Okay, they also mention decentralized finance as a whole and other forms of on-chain software systems will be part of our securities markets and not drowned out by duplicative or unnecessary regulation. So this has to do with others. The most obvious ones today are lending borrowing markets, also decentralized perpetual exchanges. That's also technically automated market maker. So all of those will be very good, and they would love to see this piece of initiative go into specific bill. Okay. Finally, task number 5 is to foster innovation for newer projects. Let's say you are starting like a small DeFi company and on some new chain, and you only are looking to facilitate like $1 million of trading volume per month. If you have to go through a whole filing process with the SEC, it might not be worth it for you anymore to get to put all your funding into this instead of development. So that's what this talks about. They're contemplating an innovation exemption that will allow registrants and non-registrants to quickly go to market with new business models and services that do not neatly fit within our existing rules and regulations. So you make something new of a DeFi platform, you don't have to worry about filing everything. Instead, you can do a few other things. You can make periodic reports to the commission, the SEC. You can incorporate whitelisting or verified pool functionality. This is, for example, if you're running a DeFi platform, lending, borrowing, or swaps, you have a verified list. So like on Airdrops, for example, you have this white list of coins that are real coins. You have the verified smart contract address there, so people don't get the wrong one. And then you have verified pools. So anyone that launches a trading pool on there, you give them a verified mark once you have checked that this project have locked their liquidity, for example, and they can't rug pull. It's not a fake token. When you incorporate these things, it's kind of like consumer protection. And if you're doing specifically tokenized securities, then and you don't want to file for like a security offering, then you can do something called ERC 3643. It's actually a specific Ethereum proposal for a token standard. This incorporates compliance directly on chain. This is called permissioned tokens. So let's say you're doing a RWA project, but very small scale. You want to tokenize your house. So you do this, you use this token standard, and then you do a forced permissioned that only eligible investors can trade these tokens. If you want to do tokenization without like complicated filing, you do it this way. So I think that's totally fair. Basically, they have thought about everything. And after reading this is so bullish. I'm so happy that the SEC actually is turning around on this. And let me give you a few summary points that I see playing out over the next few months once this comes into fruition, once these get passed as bills. So number 1 is with the DeFi parts. This one. So where is it? Here. Automated market makers. Anything that's DeFi, that's a DeFi coin, DeFi platform in the US, Uniswap, Curve, Chainlink, MakerDAO, Compound, these things have been hurt pretty bad over the years because they don't have a clear regulation, and by its core, they have fees. Do they share the fees with the token holders or do they not? And are are the platforms able to be offered in the US or are they not allowed? So those are all clear now. And this is the one big sector that has a ton of utility, but hasn't been approved by the US. But now they are. The US is clearly turning around on DeFi, and I think we got to start looking at DeFi platforms. So I've talked about it a little bit here, again, on the ETH video. These legacy DeFi platforms, they are very strong. They have very good core business. They just need a clear regulation. I believe this is the piece that's finally coming. Not only from belief, but literally they mentioned like AMMs will get their special, types of broker regulation that is not the same as a centralized intermediary. So it doesn't get clearer than that. Number 2 most exciting is ICOs. Once this piece is passed for onshoring new crypto distributions, all the new coins, you can use your wallet, buy them on chain, participate in all kinds of public sales. It doesn't get better than that. I love that. Public sales, especially when they're fair, give you such a good super good advantage. It's one of the most lucrative parts of crypto. And the people say, oh, look, all these projects raise money from VCs, from private investors. Sure. But the projects actually don't care that much. If they can raise $50 million from an ICO or choose to raise $50 million from 5 large VCs, there isn't a big difference. They would actually prefer their community to be happy and onboard 1,000 holders instead of doing all the private sale for all institutional investors. The reason why it has always been VC over the past 3-4 years is because there is no clarity on ICOs. You can't do them. And especially for these kind of things, there is a safe harbor regulation D. You can Google this. This is the thing that allows private placements of new tokens. So private investors, accredited investors outside of the US, you can do it privately instead of a public offering. And that is doable. As long as they follow these rules and as long as they have a 1-year cliff period after the tokens launch to get around these US SEC coming after you, so to speak. Once we have these rules, the new ICOs, the new tokens, they don't need to do this complicated bullshit anymore. So then they have a full choice, okay? If it's a community-driven thing, they can just do one big ICO. Or they need some institutions for specific reasons, then they will do 10 million raise in institutions and then 40 million in ICO. Like the good old days in 2017, this used to be how it worked. Nowadays, it's not exactly because the market is just unfair, but because they're not allowed to do so. So I'm super excited about this ICO thing. Really want to see this actually come out so we can all do just public sales together at the same level. People always say, oh, VCs, angels, you guys are just constantly dumping on people. Well, if we can all get in at the same level, I can actually put more money in at better terms and not look like an idiot. And whenever, we want to buy a coin, we have to always disclose, I invest in this or not. And then everyone gets mad. Hey, look, I couldn't get into this private sale, whatever. It's because the regulation literally forbids it. So I love ICOs, public sales. Let's do them. Let's do way more of them. And then finally, I think this exchange thing is going to be very cool. Every major, affiliate program, major, influencer, anyone that has a big trading community, there's such a problem. We always have to make these choices. Why do I not promote Binance as the main referral? It's because most of our audience can't use Binance. Why do I not plug Coinbase? Most people can't use Coinbase. Most people can't use even Bybit anymore. Is it because they're bad? No. I would love for you guys to all refer all you guys to Binance. It's the most legitimate exchange. I've used it for 8 years now. But the reason why I can't do it is because nobody can sign up. So why is that? It's so stupid. Why do we need to work with like 5 different exchanges all the time and then like try to arbitrage for safety of these exchanges and always say, oh, like, look, if you guys are, you know, from the West, you can only use these things, just be careful. It's so stupid. The SEC is trying to protect people, but then they do so by pushing people to newer exchanges and pushing people to VPNs, pushing people to do weird things. It's so dumb. So I really wish we don't have that anymore. And this super app legislation is going to fix that, hopefully. So we can just all trade on the best ones, period. And yeah, that's all very positive. So I think these are all the main points. Just last bit of note here, if you are curious about the Clarity Act and how this differs from the Clarity Act, you can watch this video right here that I made about layer ones and why everyone seems to be making a layer one. Whatever you're doing, you're making a meme, it has to be a meme layer one chain. You're making RWA layer one chain, gaming layer one chain. Why is every single coin a layer one? It's because in the Clarity Act and in this decentralization theater, the SEC and the CFTC used to outline that specifically if your coin is used as the native coin of a blockchain system used to pay for gas fees, then it is a digital commodity. I don't know why that is specifically makes it like a safer investment in their eyes. It shouldn't be, but this used to be the case that defined digital commodities. Now it won't be this required anymore. So you don't have to make a layer one. We don't have to hate on layer ones anymore. You can just make an app. You have the token integrated in the app. And as long as you follow these specific guidelines that they will lay out here, it's no longer just a Howey test. It will be very specific things. Then we can know for sure, okay, is it a digital collectible? Is it a digital commodity? Is it a stable coin? Is it a digital security? Or is it something else? So very good. This actually, I believe this part is related to the Clarity Act, but it will amend the Clarity Act to not look so stupid and only benefit layer one coins as digital commodities. You can still make a token in the future and have it be a commodity and not a security, as long as there is no investment contract based. So that's much more productive. Okay, that's all of the breakdown I have for you guys. Hopefully you see why I am so excited about this. This is a big, big change from the SEC, and I'm very much looking forward to the next few months. Once these are passed, we have so many more opportunities, ways to freely participate in the market with new tokens, trading all the exchanges, the best ones, using leverage if you want, without worrying about which exchange or which VPN you need to use. None of that like KYC bullshit. Can you do ICO? Can you even get an airdrop if you're in the US? Like, why? What is the SEC protecting us from by letting us not able to receive free money airdrop? How are we being protected in that way? It makes zero sense. Very excited that the SEC is finally turning around. Make sure to follow me on X at VirtualBacon0x. I'm going to be tweeting a lot more about each of these specific cases and the ones I'm most interested in. For instance, the ICO stuff. If I see anything actually moving and taking advantage of these new ICO rules that we can all participate in as public sales, I will make sure to follow that up with tweets directly. And check out our trading bots with the link in the description from Pionex. You can use them to automatically scale into the markets. Like you said, when markets are crashing and we're down 3%, like your bots and my bots and our bots have been buying the dip. So slowly but surely, these bots will help you navigate the market much smoothly, and you don't have to worry about, oh, when is the bottom? When can I put all my money in at one time? That usually is not the best way to do it. Instead, you want to ladder in and ladder out and take advantage of the market chops. So the bots will help you do that by automatically buying low and selling high when the market is taking a breather and going sideways. The bot actually benefits from these. Okay, that's it. Thank you guys for joining the live stream, and I will see you on the next video and the next live stream. Bye bye.